The US market is trying to recover last week's losses. At the same time, the macroeconomic calendar as well as the corporate reports allows traders to take a bit of a breather day. Today, markets will closely watch the speakers of the Federal Reserve. Investors will be looking for clues regarding the Fed's future moves. Analysts of InstaForex are ready to present you the outlook for the stock market. This is a fresh overview of the US market on the InstaForex TV channel. Friday's trading was shaky and ended in the red zone for the US benchmark indexes. Wall Street tops offset all the early gains and closed in the negative area. As a result, the Dow Jones Industrial Average fell by 150 points, or 0.43%. The Nasdaq index was down 0.32%, and the S&P500 index lost 23 points, or 0.53%, falling to 4,478 points. On a Monday, US stocks recovered slightly. Futures on the US indexes showed an upbeat trend and ended 0.19 and 0.48%. As for the S&P 500 index, it may hover within the range of 4,460 and 4,520 points today. On a Friday, Wall Street closed lower after reports of a slowdown in the US labor market. The weekly percentage declines in the S&P and Nasdaq were the biggest since March, with some investors taking profits after 5 months of gains. The trading session was choppy as indexes rose in the morning, then fluctuated before turning negative. The U.S. Department of Labor reported that the U.S. economy added 187,000 jobs in July, and the June data was revised downward to 185,000 jobs. The earnings data cast shadows. Average hourly earnings rose by 0.4% in July, beating expectations and bringing year-over-year wage growth to 4.4%. The indexes were also pressured by a significant 4.8% drop in Apple shares, the biggest one-day drop in 10 months. Here we will dive into the topic in more detail. You asked about the potential impact of the new iPhone release on the company's results and how Apple's outlook might affect the Nasdaq. Let's find it out, taking into account different risk factors. Apple reported that sales slumped by 1.4% to $81.8 billion last quarter, but profits still beat analysts' expectations of $81.69 billion. The new iPhone 15 expected next month and may have a more versatile USB-C port on some models. Analysts expect its release to spark a surge in iPhone sales, but it may be limited. There is a matter of a general downward trends in smartphone demand, high prices, worse consumer finances, and a slow recovery in China, where Apple outperformed Android last quarter. The decline in iPhone sales is expected to be mainly in North and South America, while sales in China, Apple's third largest market, are expected to remain flat due to the fragile economic recovery. That said, Apple's business is vast and includes Apple TV, Apple Watch, AirPods, Macs, and iPads. In addition, the company has a Trump card, the Vision Pro headset, and AI investments announced by Apple executives. The mega-cap's prospects may be more modest, but not dire, and many believe in the company. For example, Apple accounts for about half of Warren Buffett's Berkshire stock portfolio. Speaking of the Nasdaq index, note that Apple is up by more than 50% this year compared to the Nasdaq Composite's nearly 37% gain. The company's year-to-date growth is less significant, and there are better performing mega caps in the index such as Microsoft, Nvidia, Meta, Broadcom, and Netflix. Despite Apple's weight, the index has a lot to lean on, as demonstrated by last Friday's trading, where Amazon's 8% gain helped minimize the tech top's losses. When predicting the Nasdaq's movement, it's worth paying attention to a number of companies and fundamental factors. After all, tech stocks have repeatedly threatened a sell-off, which the market stubbornly ignored. However, the downgrade of the US credit rating received an instant reaction. We hope this information was useful to you, and thank you for helping us to make our reviews more relevant to you. Returning to Friday's trading, shares of other major tech companies rose by 0.3 to 3.5% after Amazon's cloud business segment beat sales estimates. Amgen added 5.5% after the company reported higher quarterly profit thanks to robust drug sales. On Monday, US stock index futures increased on a relatively calm news backdrop and hopes for a soft landing for the world's largest economy. Notably, Bank of America and JP Morgan have abandoned the forecast of a recession in the United States. Investors will focus on a consumer price data which the government will release on Thursday. In the pre-market trading, mega cap and tech companies such as Amazon and Nvidia added 0.7 and 0.9% respectively, while Apple recovered 0.3% after sharp losses in the previous session. Corporate earnings for the second quarter so far have been better than expected, with a 79.1 points of the 422 S&P 500 companies that reported as of Friday beaten analysts' estimates. Berkshire Hathaway's Class B shares gained 1.7% in the pre-market on Monday, and the most watched conglomerate led by Warren Buffett reported its highest quarterly operating profit ever. Today, investors will be analyzing the company's results and outlook. Apart from Berkshire, corporate reports in the United States are unlikely to attract investors' attention today, and the focus will shift to the Fed speakers. New York Federal Reserve Bank President John Williams, a voting member this year, said he expected interest rates to fall in early 2024. Investors will also analyze comments from Michelle Bowman, Raphael Bostic, and Patrick Harker. In the currency market, the US dollar index, which successfully outperformed the euro intraday, lost momentum closer to the opening of the US session. USDX lost 0.01% and traded at 102.05. As for the forecast, it's likely to hover between 101.70 and 102.30. On a Monday, the US dollar rose due to the weakening of the euro after data showed that industrial production in Germany fell more than predicted. That underscored the challenges facing the manufacturing sector amid the downturn in Europe's largest economy. That said, the US currency is still far from the Friday's low of 101.70, which has moved away from thanks to the labor market data. In fact, we are seeing a cooling of the employment market. Against this backdrop, it's hard to imagine that the dollar pullback will be large, as the United States still has the best economic growth in the main and data-dependent central bank. And this light inflation data on Thursday will be important. Until then, the sentiment of the dollar index can only be spoiled by the Fed speakers. As for the Canadian dollar, the currency retreated slightly from the June lows today, and the dollar-loonie pair was trading at 1.3360 or 0.10% lower. As for the forecast, the pair may trade between 1.3340 and 1.3380. The Canadian dollar weakened to a near two-month low against the US dollar on Friday, as the signs of a cooling in the domestic labor market led to lower bets for an additional interest rate hike by the Bank of Canada. The Canadian currency hit its weakest level since June 7 at 1.3393. For the week, the risk-sensitive currency is down 0.9%, and this is the third consecutive weekly decline. Today's movement of the pair relies mainly on oil and the US dollar changes, as the country has a day off and the crude prices were unstable on a Monday. Close to the US session, Brent dropped by 0.7% to $85.78 per barrel, while WTI lost 0.8%. As for the cryptocurrency market, it continues to move flat, waiting for momentum. Crypto assets are starting the week mostly sluggish and gloomy. Bitcoin traded near $29,000 or 0.2% lower. As for altcoins, Ethereum, Ripple, Litecoin, Solana, Cardano, and Binance hovered between down 2% and up 0.5%. Digital assets are still waiting, and you can talk a lot about the news of the cryptocurrency market, but that would not have a significant impact on the overall sentiment. Whales continue to accumulate bitcoins, which indicates they believe in the BTC growth. Traders discuss the prospects of the long-awaited BTC halving, which is scheduled for 2024. In the short term, crypto market sentiment could be influenced either by significant decisions in the industry's standoff with the regulators or the approval of a Bitcoin ETF. Returning to the trading outlook for today, Bitcoin remains in a narrow range of $29,000 and $29,200. If the asset settles above $29,300, it may reach $29,700. Alternative scenarios assume that the digital currency may trade sideways or decline to $28,800 and $28,400. Make profits with the InstaForex and keep track of market news on the InstaForex TV channel. See you online tomorrow.